Thank you very much, Fiona, and thank you, Paydirt, and thank you all who have stayed until almost the bitter end. I'll try not to repeat some things you've already heard on the macro side from previous speakers. We're developing the CINOVEC lithium project. It's in Europe, and I will just touch on that a little. Francis has already told you that Europe is the fastest growing market for lithium, and that is absolutely the case. Last year, EV sales in Europe overtook those in China, first time ever. You have a macro environment in which the EU is fully committed to an electric vehicle future, fully committed to building a European battery industry, and fully committed to developing the region's own critical raw materials, its battery metals, wherever possible. And that's an important backdrop against what we are doing, where we're operating. Our disclaimer, shorter than some. I won't run through every word on every slide. Please have a look at the presentation on the website at your leisure, and there's some interesting addendum slides as well. So, CINOVEC is the largest hard rock lithium resource in Europe. It's about the fourth largest hard rock lithium resource in the world. An important distinction is it's by far the largest hard rock lithium resource in the EU. And I make that distinction because, as I mentioned in the introduction, the EU is throwing a lot of weight behind the development of this industry. It'll be a fully integrated project. That is, we're not making a concentrate and then shipping it somewhere else for further processing. We'll produce battery-grade lithium carbonate and/or battery-grade lithium hydroxide and be selling it to battery makers and/or automakers in Europe. There is currently no production of lithium, of battery-grade lithium in Europe at all, as you've already heard today. The economics, our most recent PFS was about 2 years ago now. We're currently in a definitive feasibility study to upgrade that, but the economics are compelling. It showed a post-tax MPV of $1.1 billion US, with an IRR also post-tax of nearly 29%. And if the DFS comes in anywhere near that, as we think it should, I don't think we'll have any problem in the current environment in getting this project funded and through to production. That final investment decision is expected early next year, about 8 months away. In phase one, we'll produce about 25,000 tonnes of battery-grade lithium hydroxide. For 21 years of production at that rate, uses less than 9% of the overall resource. So there's certainly some scope for us to upscale things, something we'll look at shortly. For us, 2020 was all about de-risking the project. We took on board a very important project-level partner, CZECH, who is the Czech national power utility. I'll talk a little more about them shortly. They are 70% owned by the Czech government, but a publicly listed company in their own right with a market cap about 13 billion euros, so significant financial partner. We also signed a collaborative agreement with the European Union via one of its European Battery Alliance participants, the EIT, and that has them assist us with funding, grants, debt, also offtake, and just messaging and permitting in the region. And towards the end of the year, we appointed SMS Group, a very large, very well-respected German engineering firm, to be the lead engineer for our definitive feasibility study. SMS will deliver us a fixed-price turnkey EPC contract at the end of that study, and that will carry some process guarantees and product specification guarantees. So it'll be a very, very strong study. So I mentioned a little about the EU and its complete commitment. There it is, a commitment of 550 billion euros to green energy. That green energy stimulus package was announced in about May of last year. There's also been statements by the EU to say that by 2025 they want to be 80% self-sufficient in the production of lithium. Unfortunately, that's not possible. It won't happen, but it's a very strong aspirational statement, and it gives some further indication of just how committed the EU is to building this new industry. Some numbers of the uptake of EVs across the EU. These numbers just get bigger every time they're put up. And further evidence of the growth in the number of EVs that will be produced in Europe in the foreseeable future, all leading obviously to greater demand for lithium. Leading to this sort of scenario, this is a chart by RK Equity talking about the undersupply in battery-grade lithium hydroxide in the foreseeable future. I think you could put up lithium carbonate and it'd be a very, very similar story. From a hard rock perspective, if you took all of the resources within the EU, CINOVEC accounts for about 65%. So that's important for a couple of reasons. Firstly, long-term security of supply. You've got someone like Volkswagen committing 70 billion euros to building an electric vehicle future. They want to know that they can buy the raw materials for many, many years to come. There's one thing I've learned about dealing with European institutions over the last 7 years is that they're very, very conservative and they want to see big, they want to see long term. So this is where we're located. It's an ideal location really. We're in the Czech Republic on that country's border with Germany, as you can see there. That circle around us is 500 kilometres. Within that circle there's 6 million vehicles made every year. And obviously every year that goes by now more and more of those vehicles are being made electric. Ken Brinston touched earlier on the challenges for West Australian spodumene producers trying to get a product into Europe and the distances involved. Well, about 100 kilometres due west of where our project is Zwickau, where Volkswagen are building their first ever pure EV factory, and about 160 kilometres north, you'll see the Tesla logo there, that's the Tesla Berlin factory. So we don't quite have the same challenges of moving product. The Czech Republic itself, great place to do business, lovely town, Prague, good beer. It exports, most of its exports go into Germany. The automotive industry in the Czech Republic is very important, and this is driving the political agenda within the country. It accounts for about 10% of the GDP. The Skoda, although it's now owned by Volkswagen, is still considered to be the Czech vehicle. The Czech Prime Minister has stated he wants to see Czech lithium in Czech cars. We're getting good groundswell behind us within the country as well. There's quality infrastructure. CINOVEC is a historic mine, a historic tin mine that was shut down just after the wall came down in '89 because the tin price was sub-economic. Tin price is up significantly this year and that adds to our byproduct credits, but all of the infrastructure is in place, road, rail, power, water, a ready and willing workforce, and there's a strong local feeling towards the mine, towards reopening the mine. Everyone in the area has an uncle or a brother or a cousin who worked in the mine once before, and it's very important to have local community support for the project. It assists a lot with our ESG credentials that are strong. There it is, the ESG profile. So a couple of things to touch on here. Firstly, we are re-entering a historic underground mine. So that's a big tick in terms of, it's a hell of a lot better than breaking new ground. It is underground, so no, very, very minimal surface disturbance. All the front end will occur underground, excuse me, and we'll just be simply slurry piping a concentrate down the hill and into the processing plant about 6 kilometres away. ESG and CO2 footprint have become close to the most important words in developing or running mines over the last 12 or so months, and every presentation you see these days talks about ESG profile. So re-entering the old mine is very important. We also have some processing advantages over spodumene. Ken also was talking about calcination and how energy intensive that is, what a negative that is for the spodumene industry. Fortunately, we don't have to calcine. We've got a single stage mid-temperature roast, significantly lower energy consumption, which obviously goes towards your CO2 footprint. We're also in a historic coal mining area, and we'll be helping to rehabilitate old brown coal fields. We'll be retraining old coal miners or former coal miners and turning them into lithium miners, and all of these things are seen to be positive in the eyes of the EU. The clock's frozen, by the way, so I'm not 100% sure where I am. I mentioned our strategic partners. I won't read this whole slide to you, but 3 very strong strategic partners which assist us in many ways, financially, permitting, with our messaging, etc. And the SMS group brings a very strong stamp of approval within the German financing community, where we believe we'll be sourcing a fair bit of the money that we require. PFS highlights I mentioned earlier. Now this was PFS to DFS, there'll be some wins and losses, obviously. We expected a slightly higher CapEx, but we did this based on $12,000 a tonne for battery-grade lithium hydroxide, If we're doing it today, we'd probably use 14 or 15. We did it on $22,500 for tin. I think it's about $34,000 today. So we fully expect the results of the DFS to be as good, or if not better, than the PFS. If we push this through, that NPV of 1.1 billion, so half of that is ours, about 550 million US dollars. In Aussie dollar terms, about $720 million today, versus our current market cap of about 240 million. 8 months out of final investment decision with a de-risk project, I feel there's some room for price appreciation, value appreciation for us. So top section, things that we've completed to date, most recently the lock cycle test work, all of the things that go towards ensuring that the DFS is going to stack up, that we're going to have a bankable project at the end of that. Only ticks in the boxes there. What we have to do, we're doing some final drilling, bringing a larger part of the resource into the measured category, further optimisation work, met test work, etc. And as a key, in discussions with offtake. And that's really the key for us in the next few months, is to secure an offtaker. Those conversations globally are strong currently. It is a seller's market in the lithium space. Looking forward very much to securing our first offtake agreement and where that takes us. Pictorially, we believe we'll be in construction by the middle of next year. Completion of that towards the end of 2023. Commissioning and ramping up, etc., and delivering first product, battery-grade lithium carbonate or hydroxide into the European market early in 2024. The big kick-up in demand in Europe seems to be 2025, so our timing seems quite good. Just out of interest, Volkswagen has announced they're going to build 6 battery factories in the region, about 240,000 tonnes of lithium carbonate equivalent required just by Volkswagen. That's about half of, or a little over half of what the world produced last year. And you can see that's why we think that demand for lithium is going to grow quicker in Europe than anywhere else in the foreseeable future. The team we've put together, we've got people here, only a couple of us, but the projects in Europe, we've got people obviously in country in Czech and Germany, London, and also in New York. So our board meetings are nightmares to organise. But we also have, the support of CZECH with its 35,000 employees and its 30 years of history operating within the Czech Republic to lean on, and that relationship is very strong. The website is there for you. There are addendum slides and what have you. Please have a look at your leisure. Thanks very much for your time. I'll finish with 30 seconds to go.